Please come to IAS 7, Statement of Cash Flow. Very easy chapter. What is Statement of Cash Flow? This is one of the elements of financial statement. Financial statement comprise of 5 elements: SOFP, SOPL or total comprehensive income, and SOCI notes, and the fifth one is statement of cash flow. Why do we prepare statement of cash flow? When we are already preparing the statement of financial position, statement of P&L account, statement of changes in equity, what is the need to add one more statement? It helps us to understand how the entity is able to generate cash and how the entity is utilizing the cash. Since you have some knowledge of cash flow statement in your earlier levels, cash flow is divided into 3 categories: cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. So operating activity helps us to see the operating capability of the company. Profit can be earned by the company, but profit should be converted into cash. Only book profit is not enough. Finally, what I need in my pocket is the realized profit, and that you'll get to know from operating cash flow. Operating cash flow, if it is positive, it means this money has been used for investment purpose also. Okay, if operating cash flow is negative, it means company is not able to realize its profit in cash. Financing activity helps us to know how the company is financing its business, whether they are repaying the finance or not. So all this information helps the investor to have a better understanding of performance. They can link what is the relationship between profit and cash generating ability. Profit is 1 crore, cash flow is minus 2 lakh. Good sign or bad sign? 1 crore. Cash flow is minus 2 lakh from operating activity. It means your profits are only book profits, but most of it has not yet been realized. So therefore, what investors do nowadays, they have become smarter and they look at the cash flow statement also in as much detail as you look into the profit and loss statement. From the cash flow statement, they are able to also get an idea about projected cash flow of the next year. Is it right? So it will be required for preparing the future cash flow statement also, future predictability of cash flow, and therefore you can understand the risk and return better. Okay. So that is why cash flow statement is required. First, paragraph 2 deals with some important definitions. What is cash? Cash here means cash in hand, your physical currency. Cash also means demand deposit. What is demand deposit? Which means which can be withdrawn on demand. Current account balance. You can always transfer the funds at any point of time from one account to another. You can go and withdraw as much as you can depending upon the balance. You can issue a check from this account and bank cannot refuse to honor the check, subject to all proper procedure and regulations have been followed. This is called demand deposit. In short, we call it cash and bank. Cash and bank account balance. So that is cash. The most liquid asset is cash and bank because you can always use them to make the payment. Second question is, what are cash equivalent? They are not cash, but they are as good as cash. They can be used as good as you use the cash. They are like cash, means they are also very liquid. They are also highly liquid. You can easily convert into cash and then use it to settle the payment. Now, what are the features of cash equivalent? Cash equivalents are generally short-term investments. Short-term, highly liquid investment. What do you mean by short-term first? Short-term means, guess, 3 months, 6 months, 1 year, 2 year, 5 year. 1 year. No, in this standard, short-term means up to 3 months. From the date of acquisition, not from the date of statement of financial position. Is it right? So if on the date of acquisition the remaining maturity is 3 months or less than 3 months, then it is short term. And highly liquid means there is a market and you can easily go into that market and convert into cash. Third feature is that they are readily convertible into known amount of cash. Readily means easily. Point number 2 and 3 are same. Highly liquid means readily convertible into known amount of cash. What is known amount of cash? There is no loss or there is no risk of loss. Even if there is a loss, it is an insignificant amount. Say for example, there is a government bond of 3 months maturity left. So what will be the change in the value of that government bond within 3 months? Negligible. Even if the market interest rate goes up or down, but for 3 months, even if you use discounting, it won't make major impact in that. So which are subject to an insignificant risk of change in value. So that means you know that this is 1 lakh rupees bond. I am going to realize 1 lakh something, and you will realize something close to that only, not more, not less. So no major variation. Insignificant means that risk can be ignored. Can gold be treated as cash equivalent? Gold. Suppose company buys gold. No, because gold is subject to significant risk of change in value. Plus gold does not have a maturity period only. It should have some maturity period. Can equity share be treated as cash equivalent? No, again equity share does not have short-term maturity, and the last point is also not possible in equity share. In 3 months time the share price can crash by 20, 30, 40, 50%. Some notes about cash equivalent I have written below. Note, just check, is it there in your note? Yes, in that gray background. An investment qualifies as cash equivalent only when it has short maturity, generally construed as a period of 3 months or less from the date of acquisition. Underline 3 months or less from the date of acquisition, double underline, because some students count 3 months from the date of the statement of financial position. So it is possible its maturity is more than 3 months when you acquired, but its maturity is less than 3 months on the reporting date. So what will be the classification? It is not a cash equivalent. Then any investment which can be liquidated within 3 months at the date of SOFP, acquired originally for a period of more than 3 months, will not be considered as a cash and cash equivalent. And third is equity instrument unless acquired within a short period of their maturity and with a specified redemption date are not cash equivalent. So this sentence says two things. Equity instruments are not cash equivalent. But if an equity instrument has short maturity and they are redeemed on a specified redemption date, then this may be treated as cash equivalent. For example, write down below. In preference share we are talking here, because other equity share don't have a specified redemption date. So this is a very rare possibility that a preference share will be classified as equity instrument. That we have discussed in IAS 32. Maybe subject to some condition, it might get classified as equity instrument, but its maturity period should be less than 3 months. and it has a specified redemption date, then such preference share, even if they have been classified as equity, can be treated as cash equivalent. Normally in preference share, the risk of change in value is not very high. They are also like debt instrument, fixed amount, fixed redemption date. Of course, if the risk is there, you will not show it as cash equivalent. And what about cash flow? Exclude movement between item of cash and cash equivalent. Suppose you have bought a cash equivalent item and you have paid cash for acquiring that. Will that be presented in cash flow statement? Movement within the cash and cash equivalent will not be presented in the cash flow statement. Because if cash equivalent goes up, cash will come down. But if an investment is not treated as cash equivalent, then it will be shown as investment activity and vice versa. Okay, if it is shown in investment activity, again that investment can't be shown as cash equivalent. There will be double accounting and your cash flow statement will not match. Okay, if the same investment is treated as cash equivalent also and investing activity also, then your cash flow statement will not match. You have to put it at only one place. Now there is a question in your list of questions printed at the end. How would an entity apply IAS 7 in the following? Just check, is this question existing in your book? 12 number? Okay. All questions would be there at the end. So when we read a question on the screen, you have to come to the last part of this chapter. Good news, answers are printed. Only one or two answers will make a small correction after discussion if you think it is required. Okay. If required, we'll correct some answers. How would an entity apply IAS 7 in the following? A term deposit was made on 15 December amounting to rupees 10 crore for a period of 6 months. The following reporting date is 31st March. So if you count from 15 December, it is 6 months. If you count from 31st March, the remaining maturity is 2.5 months. Okay, that is less than 3 months. So the question is, will it be classified as cash equivalent? No. So the answer is investment normally qualifies as cash equivalent only when it has a short maturity of 3 months or less from the date of acquisition. Accordingly, the term deposit is classified as cash outflow from investing activities. One more question we will try to check your awareness. Company has provided the following information, regarding the various assets held by the company on 31st March 2017. Find out which of the following items will be a part of cash and cash equivalent for the purpose of cash flow statement. Question number 1. Now you only look at the screen and answer. Which of them will be treated as cash or cash equivalent? Government bond, 5% open-ended. Main purpose was to park the excess funds for temporary period. Cash equivalent. Maturity period is not given. But you can sell it anytime you want. So the answer is, the intention is not to hold it for a very long term. So we can classify it as cash equivalent, but you can always write a note that it is assumed that the maturity period is less than 3 months. But they have used the word usually, but in some cases like this, you can treat it as a, yes, original standard says usually less than 3 months is required for maturity. So you can write down here, yes. Next question, FD with SBI, 12% 3-year maturity on 1st January 2020. 3-year maturity means not a cash equivalent item. Very good. Fixed deposit with HDFC. 10% original term for 2 years, but due for maturity on 30th June 2017. Not a cash equivalent item. Now, in your answer, they have written include as it is due in 90 days from reporting date. Is it written? Cancel. Right? Not a cash equivalent because the maturity from the date of acquisition is 2 years. The maturity as on the date of acquisition is 2 years. Redeemable preference share in ABC. The redemption is due on 30th April 17. So you write can be treated as cash equivalent if the maturity on the date of acquisition was less than 3 months. You have to write balanced answer. Again, revise your answer in the notes. Can be treated as cash equivalent if the maturity on the date of acquisition was 3 months or less than 3 months. This is the easiest one. Cash balance at various branches. All branches of all banks in India. Cash. This is cash. Cash balance at various banks. All international branches of Indian banks. That is also cash. Cash balance at various banks. Branches of foreign banks outside India. Again include, unless there is a restriction, then bank overdraft of SBI Fort branch, temporary overdraft which is payable on demand. So here the answer is in your notes, which we will discuss. Come to your notes. It says do not include as it is a credit facility, but write a note if the overdraft is integral part of the cash management. You write in the exam full answer. Both answers are possible. If the overdraft is integral part of cash management. Overdraft is integral part of cash management means sometime you will have surplus, sometime you have deficit. That is integral part. If the overdraft is integral part of cash management, treat it as cash equivalent. Treat it as cash equivalent. 9th number. Overdraft facility for working capital purpose. What about 8? 8 we have already discussed. It is written temporary overdraft which is repayable on demand. Eight number is temporary overdraft which is payable on demand. So here it is integral part of your cash management. Write in bracket. Include integral part of cash management. Point number 8, write in bracket. Include because integral part of cash management. I will come to bank overdraft in a separate heading also. This also we have written include if it is integral part of cash management. Okay, come to point number 10, treasury bill. means government security. Here they have mentioned 90 days maturity. So its maturity itself is 90 days. So whenever you buy, its maturity will be 90 or less than 90 days. Include in cash equivalent. Units in mutual fund, open-ended scheme. The main purpose was to reap short-term gain by leveraging the dip in the capital market. Now, in the answer they have written, include as the intention is not to hold for longer period. But one can have a different view also. Intention is to fund the excess fund only. Main purpose was to reap short-term gain by leveraging the dip in the capital market. But you write a note here, if there is a significant risk of change in value, right, if there is a significant risk of change in value, then do not include. Then do not include in cash equivalent. Then do not include in cash equivalent. Now it depends what kind of mutual fund you have invested in. If you have invested in, say, mid-cap size company fund, mid-cap fund, then in 3 months what will happen, we don't know. Mid-cap funds, small-cap funds can be risky. Cash flow will be divided into 3 activities: operating activity, financing activity, investing activity. So next definition is operating activity. So operating activity, how do I identify that this is the operating activity of this enterprise? It is a principal revenue producing activity of the entity. So one has to apply judgment sometimes that is this cash flow from principal revenue producing activity and other activities which cannot be investing or financing activities. So the definition is very interesting. First check, is it revenue producing activity? Yes, operating. No. Is it investing activity? No. Is it financing activity? No. Again come back. It is operating activity. So they can simply write what is not investing or financing activity is operating activity. So how do we check whether this is operating activity? Add one more line to identify operating activity. This I have added just now. They generally result from transactions or events that determine profit or loss. They generally result from transactions or events that determine operating profit or loss. You write that determine operating profit or loss. This is given in the standard also, this statement. So how to check whether it is an operating activity or not? So is that activity designed for affecting the profit or loss? But this line has created a controversy in the standard, which we will see later, whether interest paid is an operating activity or financing activity. Interest paid depends on what? It can be financing. Can it be operating activity also? Is it allowed in your Ind AS? Ind AS no. But this standard says you can show interest paid in operating activity also, even if you're not a financial business or investment business. So that we will discuss in one paragraph. So dear student, once again test for you, good question. This type of question they should ask in the exam. Easy to check the paper also. Okay, correct, incorrect, match the following, fill in the blanks. Student is also happy. Institute can apply computer based testing also, right? No, not MCQ. You can give these questions also in the exam and give half mark for each right answer. And there must be a box here. You can tick in the computer, yes tick or no tick, and automatically the computer will do the counting. This is how in that CPA exams they conduct. Same problem. And there are box to tick yes or no here, and immediately the results are out. But there are many questions to be solved. From the following transactions, who has appeared for CPA? You. I have appeared and passed also. From the following transactions, identify which transactions will be qualified for the calculation of operating cash flow. Now understand business. If the company is into business of trading of mobile phones, so first we have to see whether it is operating activity. Is it generating revenue or is it related to revenue producing activity? Does it contribute to the profit or loss of mobile phone business? If not, then we'll see whether it is investing or financing activity. If not, again we will put it under operating activities. So quickly answer. Revenue from receipt from sale of mobile phones. Operating cash flow, tick. Purchase of mobile from various company. Operating, tick. Then employee expenses paid. Yes. Advertisement expense paid. Wait. Credit sale of mobile. No, because it is not a cash flow. Question is, which of the following transaction will be qualified for calculation of operating cash flow? So you should write collection from receivable, miscellaneous charges received from customer for repair of mobile. Yes. Warranty claims received from the company. Warranty claim include loss due to decrease in market value of closing stock of old mobile phones. Point number 8, think and answer. Loss due to decrease in market value of the closing stock of old mobile phones. It is not a cash transaction. Not a cash transaction. No, you have to say whether it is cash flow related to operating activity of mobile business. Payment to supplier of mobile phone. Yes. Depreciation. No. Interest paid on cash credit facility of the bank. In your notes, 11th number item, make a small correction. They have written do not include cost of finance. Write down alternatively, it can be shown in operating activity. This standard allows interest and dividend paid. Point number 11. Alternatively, write a note. Alternatively, it can be shown in operating activity. Alternatively, point number 11, right? Alternatively, it can be shown in operating activity. Okay, point number 12. Profit on sale of old computers and printers in exchange of new laptop and printer. Is there any cash flow involved? No, this is a barter transaction. No cash involved. Do not include. Non-cash transaction. Advance received from customer. Yes, it is a cash flow. Sales tax excise duty paid. Yes. Proposed dividend for the current financial year. No. It is not yet paid only. There is no cash flow involved. Okay. So this was the answer of this wonderful question. Now we'll continue tomorrow.